Good afternoon, everybody. How's it hanging? If someone could check the YouTube for me, I'm traveling this week, and sometimes when I'm traveling and I'm on this travel setup, it doesn't sound right on the YouTube. So, if anyone's able to check that out for me, I would appreciate it. Not that there's going to be anything I can do at this point, but just I'll be curious to try to do it better for tomorrow. I'm an associate member of. Oh, that's good. Look at that. Things once in a while work. I'm an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is my position disclosure. I remain very short, and I'm getting run over. Just being totally honest. But I'm still sticking with them through what is supposedly the most seasonally weak period of the year, which we are now in now. Last 2 weeks of September, we are through OPEX, so we potentially loosen up some of that gamma. Uh, as day goes by, we have less and less and less of the Cooper buyback bid. Yet this market continues to move higher in a way that I've pretty much never seen in my entire career, and I've been doing this for a long time. SPY's at 0.4%. They're actually trading down here a little bit from the close. Q's up 0.5%, also trading down a little bit from the close. The IWM is up 0.5%. The TLT is down. So, I've been saying it. I was very wrong on buy the rumors, sell the news when it came to the Fed event, with the exception of with the TLT. The TLT, they bought it up into the report, into the Fed meeting. They've sold it ever since then. So interest rates have moved higher. That's just been another thing that the market has not cared about. UUP down 0.36% today, but this also it would have failed to break down around the time of the Fed. It's been backed up into its range. It was sort of bearish, but not bullish as I was concerned it might become on a further breakdown. We had oil flat today. And here's another interesting one, though. Bitcoin smizzled. Bitcoin down 2.6%. Ethereum really whacked, down over 6%. And, some of those altcoins, Solana ETF down 8.5%. All the other coins just seemingly getting absolutely wrecked. A lot of the times we see crypto recently as like a leader to the equity market, just in terms of risk on, risk off. But once again, here, no impact on this huge sell down on crypto to the equity market. So again, it just remains the most resilient equity rally equity market I've ever seen in my entire career. Um, Seems way less muffled in YouTube compared. Okay, well, you can tune into the YouTube if you want, if I don't sound great. And again, I'm trying to win this week, so I'm just gonna do the best that I can. Um, so like I was saying, this is the most resilient equity market I think I've ever seen. And I'm trying to ask myself if I consider this to be a bubble or not. In some ways, I do. The market's very expensive, and it's entirely being led by the AI thing. But if it's a bubble, the thing that I could compare that to from most recently is late 2020, early 2021, which was a bubble, but it was very specifically a bubble in these like really crappy companies, these pre-revenue companies, and obviously we're seeing an aspect of that again today. You're seeing a lot of these pre-revenue companies like OKLO. I don't think that they make any revenue at all. Maybe they will in a few years. Just ripping higher. But it doesn't seem to me that these names honestly are as crazy as they were in early 2021. The difference is the market, though. The unstoppable nature of this market. It's baffling. We haven't been able to have more than a 2-day pullback since mid-April. It's just not how markets work. Uh, You can even just briefly compare how we moved back in 2024, which was a raging bull market. Or even this brief period in the beginning of 2024, which was a raging bull market, but you would still have along the way. This market has not even given us any pullbacks. And you could say interest rates are moving higher, and then you could say, I don't care. You could say that crypto is going to get destroyed today, and the equity market could say, I don't care. It's really just a rather incredible thing, and I don't know what to say about it. It was encouraging to me because Pat is an excellent and more patient trader than me. It was encouraging to me to see Pat say, "Hey, I'm starting to see a much better risk reward in some of these shorts, and I'm keeping them." But just we just keep tripping higher. We gapped down this morning. That gap down was a little bit exciting because we had a big gap down with crypto. And what I mentioned in the morning meeting is that the crypto market has just become much more entwined with the equity market, in my opinion, probably more entwined than it should be. Where if you begin to see margin calls going off in crypto, people might sell stock to raise money for those crypto margin calls. So we had a nice gap down this morning with crypto getting absolutely slaughtered. And it's right after OPEX as we're getting into the seasonal week period of time. And it was like, hey, we're gapping down a quarter of a percent here, and I feel like we never even gap down anymore. Maybe this could be something. And of course, pretty quickly we filled the gap. We looked for some resistance to come in. No resistance came in, and this market continued to move higher all day. I mean, intraday we went from 662 to 667. We had a $5 move to the upside all intraday for the spies. Just again, incredibly impressive. And you got to remember, and I mentioned this at one point early on in the day, the rolling off the gamma works both ways. It loosens the market. It creates a window of weakness, but it actually also can make the market move up more easily as well if there are any upside catalysts or there are, other buyers that are coming into the market. And somebody asked late in the afternoon, well, like, who could even potentially buy? And well, Pat's note answered that if you read Pat's note, which always has great information in it. Really, it's more detail here from Goldman Sachs on their U.S. equity sentiment slash positioning indicator that's actually been negative for um, it's actually been negative for like almost a record. Negative territory for 29 consecutive weeks, the third longest streak in regards to negative readings in the history of our data set, which goes back to 2015. There have been two streaks of 32 weeks of negative readings. So, yeah, it shows you that there is still somebody left out there to buy. And a lot of that I do still think comes from the more institutional style investors. And you can kind of see this here. Um, uh, Foreign investor net demand and CFTC net futures positioning stand out as having the most room to catch up. We've seen some other areas as well, some other charts over the course of the last week or so that shows that like the institutional community is actually still a little bit underinvested in this market. So there are some buyers left that are out there, but it's just incredible that we can't even get any degree of a pullback no matter what. It seems like there is always someone left to buy. And I don't have anything else really to say about it. The SPY actually doesn't do it justice on how bullish this market is because it went ex-dividend on Friday. But you can look at the SPX. The Qs on Friday looks like almost got to extreme extension. And at highs today, the Qs almost got to $10 of extension. That's the other incredible thing is that I feel like we've been positive every single day this September so far. And I'm just eyeballing the daily chart of the spies, and it looks like it. I think we finished down 0.1% on the Fed day, and technically the first day of the month was a negative day, but we closed well off the lows. We got bought up all day. Yet, even with us being green basically every single day in September, we have not had an instance of the market hitting extreme upside extension because it's been like a hard, fast grind higher. Um, it has been a grind. It hasn't really been a momentum move higher. Only Friday into today did we actually begin to see the cues starting to get some degree of upside extension. And obviously, um, we're getting these indexes to be even more expensive. So $10 at $16 is not the same as when we're looking at $10 of extension back at 450 either. So yeah, I mean we'll see how it plays out. I continue to think that the way that the market's been moving higher has really hit a peak that's unsustainable. Um, Someone in the VTF today said that the weekly chart of the Nasdaq is starting to look like a meme stock, and I kind of agree. I mean, look at this weekly this last 4 weeks as well here as it continues to move higher. Just incredible. But no sign of a pullback, and some of these stocks, uh, for regular companies like this SanDisk having not touched the ADMA on the daily chart like a single time yet this month, WDC like extending higher today, STX extending higher today. Micron had been one of those, but I think Micron had negative news on Friday that slowed the stock down a little bit. It reminds me a little bit of June with how Micron went. Um, Back in June, there was a few names, even though the index was relatively flat for most of the month. There was a few names within the dispersion context that was really, really, really strong. I remember looking at Micron's run back then, and Micron ran from 95 to 128, pretty much straight up without touching the ADMA on the daily. The only thing that was able to end this run was actually Micron reporting a really good earnings report. And then that was it, right? Micron didn't make a new high for 2.5 months or so. And this was a damn good earnings report. Micron, by the way, reports again tomorrow after the close, so that'll be interesting. So when I'm looking at like Micron, the Micron slowed down on Friday. If I'm looking at like SanDisk or STX or WDC, or even if I'm looking at like some of these other ones that are starting to run, like APP has just been completely on fire again. Or obviously you've got like the crypto names. Crypto gapped down this morning because QUBT was doing the secondary. They bought everything else up. There's just a lot of these names that are running left and right. I'm like, what stops these stocks? Sometimes you need an event. So I thought maybe it could have been OpEx. Like I was thinking about it over the weekend. Like Palantir posted its earnings report, finally stopped moving higher because I think it needed to just get through Friday OpEx of everyone that had hedged themselves for the earnings report that created an upside squeeze and the unwinding of those hedges. And then once you got through the unwinding of those hedges on that Friday, the stock wasn't able to continue. And then eventually it rolled down. And when it did roll down, it rolled down really hard. So in my head, coming into today's trading session, even though those were just weekly options for Palantir, it was after a specific event. I was like, okay, last week we had the Fed. You get this like Vegas squeeze higher because the VIX had moved up in front of it, and people have to unwind those hedges. So we're squeezing the market up. OPEX I think is creating a bid in and of itself underneath the market, and you're getting that Vegas squeeze. In my head, I was almost wondering if starting today we would get an event similar to what I had seen with getting through the Palantir earnings event, where then it lost its steam and eventually rolled down very, very hard. Obviously, that didn't happen today, as we were able to just, continue higher one trading session after the next. But as I have this Palantir up, I do think it's a good example of what we can see with this market when and if the selling ever begins. I think when the selling starts, it'll start maybe slow and then accelerate, almost similar to what Palantir actually did when it finally ran out of gas and sold back down. But I could be wrong on that. Um, but it is the most scintillating period of the year starting now as we kick it off with a bang and new all-time highs and make it up huge. I think tomorrow marks Rosh Hashanah, and there is that common trend saying of sell Rosh Hashanah by Yom Kippur. I was joking around in the VTF that I might have to convert to Judaism if we actually start selling down tomorrow. But that's it. I don't really have anything else to say about it. I think they're doing a pretty good job in the VTF on trying to focus on relative weakness with a lot of names, and it still led to some selectively good callouts. We recognized the Palantir relative weakness, pulled out a short here off the 950 bar. That ended up being a high, and that trade worked out pretty decently despite the market continuing to move up. Similarly, Nvidia had been relatively weak. Called out a similar Nvidia short off this like 176 area that were great until the news came out. And speaking of this news, by the way, I don't feel like that news saved the market to me. I know you can't really see it in the spies, but in the beginning of the trading session today, I didn't see what was really driving this market rally outside of Apple and Tesla. Apple was phenomenally strong. Tesla was phenomenally strong. Pretty much everything else I looked at did not seem like it participated. And even now, you can take a quick look at Mag 7. A lot of them did not participate. Amazon, very garbage today, really did not participate. Google, um, not good, really did not participate. It was weak even before it had that crazy downtick at like 11:30, and it stayed kind of weak throughout the rest of the day. Microsoft, nothing to speak of here really. Negative pretty much all day, going sideways all day. Meta also closed on lows, rolled down all day, was pretty weak. So in the beginning of the day, it was Apple and it was Tesla. And then Tesla moved down and NVIDIA picked up the baton. But I didn't see a lot that was out there to really be driving the market up the way that it was outside of those, two major mag stocks and further continuation from some of these already extended names, which aren't mega cap ratings like like a SanDisk, which SanDisk actually was weaker today. This was another one that we were looking at, but we could never actually get continuation through this like 103 on the downside. So I don't know, guys. That's pretty much what I got. I have a game plan where I'm really trying to stage to this market as we go into the seasonally weak period of time. It is costing me a lot of money, but it just is what it is. I own my game plans to the death, and that's what we're doing at this point. I'm kind of developing a game plan to reduce risk, but I'm trying to do it in a way that minimizes loss. But we'll see if the market ever sells down. It would certainly help. So that's what I got. I'm happy to turn it over to you guys for anything that you may have. Um, First thing I think I'm seeing is from Tate. If we don't sell into October and continue holding towards the end of the month, what is the end of the year outlook if we don't get that selling? I think that the end of the year outlook becomes very, very bullish as we get towards November. It's pretty far out, so for sure, we'll take it one step at a time. But generally speaking, we're in the weak period right now. We're in the period where the corporate buyback bid is not ongoing. We're in a period right now where the systematic bid it actually still exists, but it's become significantly, significantly less, and could very quickly turn into selling if there's an event. But then you go into November, and November is when you see a lot of bullishness really returning to the market for the end of the year. A lot of forced buying that comes back. Like right now is when we're losing the forced buying. So that's why there's this window of weakness, this window of opportunity for the market to sell down. But once you get into November, December, I don't really want to be short for that period. So that's why, my game plan that I have, and I'm sure it's more based on time than on price, which is obviously very dangerous because price can continue to run away from you. And if you've got too much sizing on that, you could find yourself in a lot of trouble. But I, really want to stick through with my shorts and manage my shorts as best as I can throughout the seasonally weak period of time. But my game plan has been to be out of them, dramatically reduced, and or have more longs on by the time I'm getting into the end of October. So hope that helps, but let's take it one step at a time. Uh, from John, any thoughts on OKLO for a POSS short, a position short? This another name. Look, I love the idea of being short this OKLO. That would be a possible short. The first thing I would say is I love the idea of being short this OKLO, especially with somebody posted a good synopsis of the stock and the VTF early on in the day today, and uh, some interesting information. It's a pre-revenue company that if they can potentially get the government approvals that it needs, might be able to start building nuclear stuff in 2 or 3 years, and then maybe can begin to get some revenue to come in. And the stock is obviously just continuing higher. I forget what the market cap is, but it's a very high market cap for a company that doesn't even have revenue. It's another example of a hope and dream company. That the hope and dream companies seem to be the best ones out there. I love I've done very well personally trading higher float, like pre-revenue names to the short side after they have crazy extension moves. And this OK low is hitting a point where it's kind of coming into that sweet spot of how I am able to short these with a lot of success. You get one more big update tomorrow, then that would be something I would be all over. So I like the idea of looking for this for a possible short. Um, so yeah, we'll see. Why isn't ISRG moving on robotics and AI? I don't know. I don't know enough about ISRG's business, honestly. I probably should. But we were jumping around in the VTF about Crocs. I think Rock mentioned that Crocs are trading at like a 6 PE or something like that. And I was like, well, all they need to do is say that they're putting AI into the shoe and it'll go up 4,000% within the next month or so. So we'll see. From Edward, when you're in shorts that get away from you, how do you decide when to add to your positions? So, like usual, I kind of have these preset game plans on how I trade that I know what I'm going to do in pretty much any and every scenario before I actually get into it. So, really what I'm doing for some of my shorts I'm going to add at this point is I'm adding at increments. I'm adding in increments in which preset. The adjustment that I'm potentially about to start making to my game plan for risk management purposes, if we don't begin to sell off pretty much immediately in the next 2 days, is when I make money from shorting some stock and rebuying it for a profit off of those pieces. Like, let's just say I, shorted a piece of STX, which I am short and sorting against me. If I'm able to short some even intraday at, $228 for, let's say, 100 shares, and I covered at $227, I just put like $100 in my pocket. Well, then what I'm able to do is I could take a bid that I had at 200 and I could put it at 201. So I'm bringing it up a dollar, which means that I'm losing $100 on that side of the trade, so that I am able to reduce sizing and reduce risk at break even pace instead of just like adding forever infinitely. So that's kind of how my game plan is geared now towards working out of it for at this point not a loss, but for still wouldn't even necessarily be for no gain. It would be for a gain at this point, starting to give up on some of the potential gains of the trade for risk management purposes. If that makes any sense, it's all math. I really think that all of good trading is based on a combination of game planning that's firmly rooted in math and understanding that math really well. So yeah, that's kind of what I'm doing. Um, did SNPS and Lulu properly buy out? SNPS. Looks like it. I mean, SNPS is up into the 21 EMA here, so I would expect it to find some resistance at some point soon. Though there's no such thing as resistance for stocks anymore. And Lulu, I don't know. I could see a person that could be a base that breaks out, or it could be a big fly that gives further downside continuation. I don't follow the stock super well to feel confident in giving you an answer on which one's the higher probability there. Over onto the YouTube from Apex Joy. Do you think OKLO is ready for a short? Yeah, so just was answering that one for John in the VTF. I do like OKLO for a short. Certainly make sure that you got the signal for it and you have your risk management in place because you got to be careful with those names, especially with the way that they've been squeezing recently. Next from Katie. Pretty disgusting move. Most sectors red and ticks were SHIT. I'm not supposed to say that word on the radio. Will find me. Yet the futures rocket up. Yeah, 100%. If you look at like RSP is flat on the day. It really did not perform. It was pretty weak all day. Is it flat or red? No, it's flat. This must have went ex dividend today. Um, so yeah, RSP was flat on the day. QQQE um, is up 0.5%, and QQQ is up 0.6. All right, so not that bad. QQQE did participate, I guess, a little bit. But yeah, a lot of stocks just did not seem to um, participate, but the indexes continued for sure. From QQJJ, what do you think about the $100,000 fee on the H-1B will impact the market? I'm not sure that it has a short-term effect on the market, to be totally honest. I'm extraordinarily disappointed with the administration on this one. Uh, One of my favorite things that the current administration said that they were going to be doing when they first took over this year, um, which I thought was cool, and a lot of traditional Republicans disagreed with it. But Elon Musk and Donald Trump are saying we're going to increase the H-1Bs, and I'm all for that. You guys have all heard me say in the past how important I think H-1B visas are to the United States. We are able to attract the most intelligent, hardworking, best and brightest people from the entire world to come to the United States and innovate here. And if you look at so many of these S&P 500 companies, I mean, I don't know the full background on everybody, but the CEO of AMD, the CEO of Nvidia, the CEO of Microsoft, the CEO of Google. Um, I don't know if they're all born in the United States or some of them are born elsewhere, but they're certainly not all white men. Mm, But it I was hyped when Elon Musk were like, we're gonna do more H-1Bs because I've been complaining about this for 15 years. These people come here and they get master's degrees and PhDs from the best universities in the entire world. We need them to stay here to make America great and innovate and create these companies. And now we're making it more and more difficult for that to happen. So I mean, I think that it negatively impacts the United States over the course of the next 10, 20, 50 years. But I don't think it negatively necessarily has any impact on the S&P for tomorrow. To directly answer your question, I think it has virtually no impact on the market itself. But it's terrible in my opinion. And you know what? I sincerely apologize because we've got some people here on our team who are on like OPT visas and are hoping that if they can have a good enough of a performance, that T3 will sponsor their H1B. And I've directly sponsored a few H1B visas for players on my team um, in the past, and I was hoping to continue to do that. And my sincere, genuine apologies for this terrible policy that the United States is making. Because if you are a trader on my team, I'm like getting upset even saying this. If you're a trader on my team and you're on OPT and your goal was to develop a good enough of a performance as a trader here so that T3 would sponsor your H1B, it's almost definitely not happening. T3 is not going to spend that extra. They're already a kind of expense, by the way, to sponsor H1B. It's already difficult because it's already really expensive. And now that because you have to pay and hire lawyers and do a whole bunch of other stuff, and now it's going to be an extra $1,000 on top of that. So my sincere apologies to anyone who joined the team here, and you're working really hard to develop a good track record so that you can get an H-1B sponsorship from T3 because it might have been possible last week and it's not possible now, and it's fucking bullshit, honestly. But I can't do anything about it, and it's more on a personal level and less on a stock market level. It's got no impact, I don't think, on the market. So anyway, on that note, uh, Yes, exactly. On that note, I think I got through all of everybody's questions for today. Um, Baidu, sure, I'll take a look at Baidu. Yeah, I just think these Chinese names got ahead of themselves. I'm super bullish on them. It's looking they're really cheap. I don't like Baidu's candle today. I don't love Baidu's candle today. You know, Baidu actually tried to get bull flag continuation, like what we talked about all the time. When the ADMA hasn't put up to the base, getting flag continuation is a very high probability of failure. So it's kind of what Baidu looks like to me. And I think that these names are just saying after today that they need some time to digest those gains, to pull back, to consolidate, and let the moving averages catch up. So hope that helps. Again, I am in Chicago for the week, so I'm doing my best to see it and enjoy it a little bit. So have a great night, everybody. I will see you all tomorrow.